Hi, Jimmy. We are live. So good afternoon to you. How has been your Sunday so far?
Very good. Thank you. The Sunday is very good indeed. Thank you, Lee.
Okay, great. So today, I have actually got two stories to share. So will be great if I can hear opinion. So by the way, for those who are joining us for the first time, welcome. This is our weekly edition. Okay, when I say weekly, okay lah. Try to be weekly edition of our Investing Bros Market Talk, whereby we pick up some of the interesting topic of the week and we want to share our opinion or analysis. So today, the two things actually caught my attention. So let me just pull out my slides. Okay, so great number one. So Keppel actually revised offer for SPH with due certainty. So for those who have been following our Investing Bros Market Talk, and if you have take a little bit of action, you should be quite happy right now. So long story short, if you don't know what has happened, SPH is selling away their non-media asset and Keppel has thrown a bid. That happened in August, and of course, there was a counter bid just, I think, a few weeks ago. And the latest here is this Keppel again countered the bid, and at the latest price of $2.35, $2.35. And this is what Keppel is offering right now. And of course, the market actually now react very positively to it. This is the last Friday closing price. The price now is actually 233. Okay, so just to share with you, we have actually been following this story for a while. So this was done in October 31st when there was a counter bid, okay, at $2.10. We shared our opinion on whether is it likely for Keppel or anybody else to increase the bid. And yes, we believe so. And yes, true enough, okay, Keppel actually upped their bid. So why do we actually think at that point in time, Keppel or anybody else is likely to up the bid now? Because as you can see here, hopefully it's not too small, the net asset value of what SPH is trying to sell is actually about $2.26. Okay, so whereas at that point in time, the bids by Keppel and by the other group is actually about $2.10. So I thought there is enough room for them to upbid. And true enough, in fact, Keppel now the bid I thought was actually quite generous. Now the bid actually go up to $2.35, as you have seen earlier. And of course, for those who even caught us earlier, okay, when we actually first shared the story in August, at a point in time, the price of SPH is only $1.89. And yes, we thought that was undervalued. And yes, look at Jimmy's face. I don't know if you can see how happy he is. We thought it was undervalued. And of course, for those who take action there, congratulations. I think you make a cool, well, not too bad. I think 20+%. Okay, now, Jimmy, okay, do you think that Keppel will a bit further or more counter coming in?
I don't think so. I think right now what they are bidding is almost like 5 to 6% above the NAV value already.
Yep.
So unless there is a specific reasons which I can't find any for now, I believe that offer will be stand as what it is. Yeah, that's my personal opinion. Yeah.
Okay, so that is my same view here. So for those who have missed the boat, no, it's okay. Things like this do come and go. Okay, no point asking, hey, at 233, should I buy? Yep, I think it's too late. So there's always a next one. Okay, all you have to do is what? Keep a lookout of Investing Bro Market Talk. Okay, now let's come to the other story, okay, which may be quite interesting. We are expecting 2 new REITs ETF to go and get listed by this week and next week. So we have this UOB Asia Pacific Green REIT ETF and the CSOC IHRS REIT Leaders Index ETF. Now, so just in case you are not familiar with ETF, what ETF does is this. Okay, they just invest in constituent stocks of an index. Okay, so like for example, STI, Straits Time Index, there's actually 30 constituent stocks. And if let's say we have a STI ETF, basically the ETF will invest in that 30 constituent stocks. So in this case, there is actually a IHUOB Asia Pacific Green REITs Index. And of course, there's actually this IHS REIT Leader Index. So if you're interested to learn more about index, you can go to SGX website. You can learn more index. Now, what all this ETF does here is this. Okay, they actually invest in the constituent stocks. Okay, so I'll just go through a little bit more detail. Then again, we'll get Jimmy's opinion on how he feels about all these ETF. Okay, let's talk about. Okay, so as I mentioned, these are the closing dates if you actually want to buy them pre-IPO, but I don't think there's a rush for it. So these are the dates. They will be closing this week. As I mentioned, I believe the IH one will get listed by this coming week, and the UOB one will actually get listed by the following week. Now let's talk about the UOB Asia Pacific REITs ETF first. So as you can see here, they are going to be invested in 50 constituent stocks, or either 50 REITs. Okay, so this ETF will invest in 50 REITs. And these are the top 10 REITs. So these are some of the companies, or these are some of the REITs that they're actually going to invest in. So as you can see here, so these REITs don't just focus on Singapore. They actually focus on various countries, Singapore, Japan, Australia, Hong Kong. Jimmy, you actually did some research on all these REITs. Do you actually want to share a bit here, Jimmy?
Okay, interesting that this ESG REITs, they call it, that's why they call it Asia Pacific Green, and the whole idea is coming along the line of ESG theme. And as you can see from the top 10 top 10 holdings, the Accenture Group, the Sexus and Maverick Groups, these are basically Australian company. The first one is being more of a mall type, the very Western style of malls. So that's basically the kind of REITs that they are having. Then the other one is DSUS. I hope I pronounce it correctly. It's more towards the office type of REITs, very similar to OUE or Suntec type of thing, minus the mall. And then the last one, the Maverick Group, which is basically a mix of retail, residential, and industrial. So it's sort of like a mixture of everything, very similar to, a combination of different maple trees put together. And finally, the number 4 one, which I'm going to name the first 4, right? The number 4 is Link REITs. So Link REITs is the one in Hong Kong. Now, if you want to think locally, basically is that if you privatize HDB commercial side of things, that means your HDB shops and things like that. Basically, that is Link REITs. Is a governmental driven kind of REITs as well. So these are basically very powerful groups. And of course, at this point of time, what I can say is that this REITs itself, now you can see that the spread is Australia, Hong Kong, Japan, and Singapore. But if you want to look at it in a diversified way, this REITs itself is mainly 40% in terms of geographical spread. Australia is 36%, Singapore is 16%, and Hong Kong is only 8%. So that basically give you a wide exposure in terms of a regional instead of just focus on Singapore. That's basically a very quick rundown on, a portfolio of this Asia Pacific Green REITs.
Thank you. Yeah, thank you so much, Jimmy. Thanks for your insights. So as Jimmy has mentioned just now, so this ETF have a very clear investment focus, which as per the name suggests, green, okay, so which is sustainable environmental factors. So as you can read here, there is this disclosure requirement by GRESB on ESG. And basically, they only invest in REITs that make the criteria. So, of course, I don't think today I have time to go through what is this GRESB. So, for those who are interested, you can just visit the website. Yeah. So, the UOBAM website. Okay. This is the asset manager for the REITs. They have actually detailed down what are some of the specs of this REITs that are actually chosen in this index and, of course, in the ETF. Okay, so that is for UOB Asia Pacific Green. So as in any other ETF, exchange traded funds, or as in any other funds, of course, there is management involved. Someone is actually managing the fund. Then obviously they're not going to work for free. So these are some of the management fees. So if you can see here, the most significant one is this, the management fee is about 0.45% per annum. Okay, as you can see here. And there is an array of some other fees as well. So if I just do a quick ballpark, we are looking at the fees of about 0.5 to 1% per annum, 0.5 to 1% per annum. So which means to say, so whatever dividends that is being generated from this portfolio, probably 0.5 to 1% will be paid off to the management first, then the rest will be distributed to all the ETF units holders. So that's how the fund works. So you, after you buy, you are not expected to pay. Okay, but the dividend you receive will be net off the fees before you actually get them. Okay, last thing about this ETF, the fund aims for a quarterly distribution of up to 4% per annum. So take note of how is it being worded. He used the word aims. Aim, so doesn't mean you'll get it, and he actually put it very clearly. Distribution are not guaranteed. Distribution not guaranteed. So this is actually from the asset manager website. If you're interested, you can just go to the website and find out more. So just a quick overview of what does this REIT entail. Now, the other REIT is a bit more straightforward. Okay, they are actually investing on the IHS REIT Leaders Index component stocks. So these are some of the top 10 constituent stocks of the index. So no surprises. Okay, all the usual top REITs in Singapore. So as the name suggests, this is only invested in Singapore REITs. Okay, only invested in Singapore REITs. So I'm quite sure, especially for those who invested in REITs, you actually find this name quite familiar. Okay. Same thing for the fees. Yep, it's about the same. I would think it's about 0.5. Of course, plus others, we should be looking at a fees about between 0.5 to 1% per annum. Okay. Yep. That's an overview of these two REITs that is actually going to get listed. Now, let's hear from Jimmy. So apparently now, ETF investing is really in the fad now. So instead of buying the REITs individually, it seems like more people are using ETF. Okay, not just on REITs, but on your stocks. So what are your views on this? I heard that you're quite big on ETF investing. Yeah.
Yes. In fact, I'm one of the ETF fans. So the reason why I'm doing that is like, number one, I think those who actually follow me will know that I'm trying to simplify the process, my investment process, by having some of the, what we call the fixed income type of stocks and turn it to an ETF, whereby I don't really have to, spend a lot of time just trying to manage a basket of stocks. So instead, I will just manage a basket of ETF. And second thing is that by managing a basket of ETF, indirectly, I'm actually also managing a larger portfolio of stocks. And going by the law of large numbers, that also actually indirectly diversify my risk as well. So I think there are basically two reasons for me to do that, and that is basically the two main reasons. So that's my personal take on this. So like, for example, this REITs type of ETF, initially I didn't quite like it because, because basically I'm paying money, good money to the fund manager when I can manage myself. But then as time passed by, I realized that, there's only so much time I have in a day. So I would rather say, why don't I just pay the manager, a small fee, and then at the same time, I can concentrate my effort to look at some other more complex stuff, So that's basically my personal take on ETF. Yeah.
Thank you so much, Jimmy. So maybe I just share my opinion on ETF before we just call it a day. So of course, if you ask me, are they good product? Definitely. You're actually getting a professional fund manager to help you do the REIT selection, to help you monitor. Okay, but as for what Jimmy has pointed out, this fund manager also have to eat. They don't do it for free. You actually have to pay them. So it really depends on your investment strategy. Of course, if let's say like I myself, I like to do my own analysis. I like to find my own REITs. Yeah, so maybe I don't have to pay them. Okay, but if let's say you really have no time, actually, I think some of these ETF really make sense. So just for the record, so in fact, I'm actually doing both. I do buy my own REITs. I do create my own REITs portfolio per se. At the same time, I also do invest in ETF. End of the day, like what Jimmy has said, law of large numbers, diversified, and I think that's a good strategy. So this is the good thing about stock investing. Like I always joke, buying stocks is just like having girlfriends, not wife. So don't have to think too hard. Okay, joke. Okay, so Jimmy, any other last comments before you call it a day?
Okay, so I guess some people were going to ask is that, okay, between the two ETF, if I can pick one, which one would you pick, right? I guess that's probably one of the burning questions.
You're right, yeah.
Yeah, so I probably just summarize one important thing. Is like the UOB, green REITs ETF, that total expense ratios is actually quite high, as compared to the other one, the IH REITs ETF, leader REITs ETF. So in terms of payout, that expense ratio is going to eat up your the dividend payout per quarter. So they like what Amy has just pointed out, is going to pay up to 4%, which means that roughly we are looking in between 3% to 4% range, which I think that is pretty low, and our objective is basically to have the fixed income, right? And therefore the yield, the DPU yield is actually absolutely important, or dividend yield is actually absolutely important to me. So in my personal opinion, compared with these two ETF, I will feel that the IH leader ETF seems to have upper hand against the UOB green ETF, So I'm not too sure about Emin. I mean, is that what you're thinking as well?
Thank you so much, Jimmy. Okay, so yeah, in fact, I do have a little bit of difference in opinion. Okay, but this is because my own REITs portfolio is actually predominantly in Singapore already. Yeah, so to have another ETF that's based on Singapore may not really complement. But to me, if I were to buy, yes, I probably will go for that one with some overseas exposure. It's just more for diversification purposes. Okay, but you're right. I am also not so excited by the kind of dividend. But of course, I think the concept of ESG is something really catching up. Yeah, so probably to me, I think it's worthwhile at least to pay a little bit more attention. Seems like there's actually a lot of interest in ESG investing. Yeah, never know. This may be my first foray to invest something that's ESG related.
Hey, good.
Anyway, yeah, different way to slice a cake. Okay, I think with that, thank you so much. Also, once again, this is Investing Bro Market Talk episode 11. Okay, so if you think that what we have been doing makes sense, you have been benefiting from it, do us this favor. Do us this little favor. Okay, click on the like button. Help us to share so that more people can actually benefit from this information and get us more motivated to do video as that. To do video like this. Okay, so with that, thank you so much. Take care and see you next week.